So you might want to know, when can you delete your supply and demand zones? Are zones still valid to trade from and stuff like that? So first of all, what you need to know is your overall higher time frame bias and higher time frame narrative. So I'm assuming that you've done all of this, and then what you want to do is obviously drop down. For me personally, it will be onto the 15-minute because the 15-minute is the time frame that I focus on most for intraday. So this is where I'll be marking out most of my, supply and demand zones and, zones on the chart that I'm looking to trade from. So as you can see here, I'm on the 15-minute chart, and what I'm going to do now is obviously what you need is you need your structure marked out. So for me, this would be a 15-minute break to the upside, and then we break to the upside right here. And the overall thing that you want to remember is obviously, if I just bring this back a little bit right here. So at this point right now, what is happening is obviously we've had a break of structure to the upside. So what would be happening is we would be trading between this low and this high. So what you want to be doing is you want to be marking out your supply and demand zones, obviously within this range. So obviously if I just mark out a couple of zones here, so what we've got here is we've got this zone. So we've got this demand zone, we've got like this demand area right here, and then what we've got a bit further down is we've got this. You could end up with a load of demand zones on your chart, so you want to just go ahead and obviously pick out the high probability ones. We've got this one right here, and then we have also got this extreme demand right down here. So what you want to keep in mind obviously is the trading range that you are trading with, because you don't want to have tons of demand zones to the left hand side. You could come all the way over here, you could have demand and supply zones everywhere on your chart, and the main thing is you want to identify obviously the trading range that you are trading within. So if I just go back out actually and just bring price back to where I was before. So this is where I was before, right? And what you want to know is that price hasn't come back down to any of these demand zones right here. And if I just get to get out my premium and discount tool right here, as you can see, it's still within premium pricing. So a lot of people might not want to trade from this area in premium. They might want price to retrace into the discount. And what you want to notice is more often than not, price will come back and mitigate the discount of your this leg specifically. But what has happened now is that we've continued to break to the upside. So obviously you broke to the upside right here. You broke to the upside right here. And then you might be thinking, do you then go ahead and, delete all of these demand zones right here? For me personally, what I do is I delete these demand zones, but I also keep them in the back of my mind. Obviously, if you're starting out and things like that, and it helps you, you could obviously keep these on your chart, because what this is going to be is these zones here are going to be a catalyst for a pullback. So what I'm thinking with these zones is I'm not thinking we're going to come back down into these and then go ahead and put in more highs. Come down into this one, come down into this one, come down into this one, and so on and so on. What I'm thinking of this is I'm thinking obviously with the daily higher time frame narrative that I've built is that the daily is still bearish, and obviously the expectation of the daily is to go ahead and put in obviously a new lower high and then a new lower low. So that's the expectation of a daily. So for me, these demand zones here, what I obviously forecasted before this actually played out, what I was thinking is these zones here will be a catalyst for a pullback. So what I was thinking is obviously price will come down, we'll get a reaction, price will come down, we'll get a reaction, obviously, and then we'll just continue like this until we come down and break this low right here. And obviously on the overall higher time frame, I'm expecting the daily low to go. So if I just play price forward and just show you guys what happens, so if I just drag these out, so what you can do, obviously, you can take trades down into these demand zones, and then once price comes into these demand zones, you could take longs short term and get involved in the market in a long trade. Obviously, you will have to be very careful and obviously really aware of where you're taking profits. You don't want to be holding trades once they've come into this demand, for example. You don't want to be holding trades in order to take out the highs right here. You might want to look at taking profit really, really fast. So let's just see what happens with price. So as you can see, price will come down. The first demand zone right here, obviously it's a flip zone, comes into this supply. reacts, and then obviously breaks the highs. And then what does price do then? It comes down, we get a reaction. There's possibly, you know, an entry here on the 1 minute time frame. On the seconds time frame, there will be an entry here. And then what you could do obviously is you could take a long from this demand up into this supply, for example. You don't really want to be taking trades long term, like I said before. And then if we just continue and play price on, again, price reacts to this demand zone right here. And as I stated before, obviously when I forecasted this before this price did play out, I was thinking myself that this could be a catalyst for a pullback, like I said, because the overall higher time frame narrative that I built is for, you know, the daily to come lower and the 4 hours to come lower as also. So just play price forward. Obviously, price obviously doesn't respect this one here. It blows straight through that, but then we get a reaction to this one. And then if we carry on and play price forward, obviously it reacts to, you know, something to the left hand side here. If you drop to a lower time frame, there will be something here, you know, that price does react from. What do we do then? We come lower into this demand zone right here, and then we get a little reaction. If I just play price forward, we do get a little bit more of a reaction. And then what happens is we come down and eventually we take out this low. So we come up, and then eventually, obviously, we take out this 15-minute low here. And this is where, you know, this could be the first sign of the daily and the 4 hour coming lower, because we've had obviously a 15-minute breakout structure to the downside. So overall, what I would do, like I stated in the beginning of the video, what you want to be doing is you want to be identifying supply and demand zones within the range that you are trading with. So in our example here, the demand zones was in this trading range right here. And then obviously once it breaks out, you'll, you know, mark demand zones here. And then when it breaks out, you'll mark demand zones here. So what you can do is you can obviously, you know, delete demand zones, but you also need to be aware of where price might react at a later date. Obviously, this demand zone here is unmitigated. This demand zone here is unmitigated, 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 unmitigated. So obviously, you know, the 15-minute time frame does hold some weight. And when there's unmitigated zones like this, you know, you can expect a reaction from, you know, these zones right here. So yeah, that's just a little explanation of when I keep my supply and demand zones on my chart. Obviously for me, I know where these demand zones are because I've been trading quite a while now. But if you are new, what you can do is you can leave these zones on, but obviously you don't want to be leaving zones on, you know, what are right over to the left hand side, because your chart will just get messy and it will distract you in the long run. But yeah, obviously just be aware of where these supply and demand zones are, where price might react at a later date. Obviously they're still valid to trade from. But yeah, if you are going to trade, you know, from zones like this, just be clear about your higher time frame narrative, and obviously don't be, you know, holding it to the moon or just holding it till it drops through the floor. You want to be in and out of these trades, like here for example. If you take a trade here, you don't want to be holding it very long. You might be able to get like 5, 7, 10 hour out of this, and then obviously it reverses and then it will take you out. So like I say, don't be, you know, holding trades to come down here, react, and then go to take this high out, because it's just not going to happen if you obviously understand your higher time frame narrative and what you expect price to do. So yeah, I hope this video, you know, provided a little bit of value. Hopefully it helped you when to, you know, keep your supply and demand zones on your screen, when supply and demand zones are still valid and when they aren't. So yeah, hopefully this helped you out, and thank you very much for watching guys, and I'll see you in the next one.